Hello friends, it's a pleasure to meet you again. Here, this is a part 2 for amendments that we have got for May 2022 and November 2022 examination intermediate. If at all you have not seen part 1, check the link that is available in the comment. Then please go ahead and see part 2, which is the current video. So in this part, we'll continue the amendments that we left. Now, we are going to talk about section 80 EEA, the amendment that was brought in section 80 EEA. 80 EEA is deduction that is available for interest, on housing loan. Interest that is available for housing loan. Already you would have claimed under section 24 2 lakhs for a self-occupied property. Over and above that 2 lakhs, another 1.5 lakhs can be claimed under section 80 EEA. Another 1.5 lakhs can be claimed under section 80 EEA. So these are all not amendments. These are all that we have got. What is the amendment that we have got is, for the purpose of claiming the deduction under section 80 EEA, the loan should have been taken between 1st April 2019 to 31st March 2021. The loan for this residential property should have been taken from 1st April 2019 to 31st March 2021. Now, they have amended and they have said instead of 31st March 2021, you can now take a loan till 31st March 2022. You can take a loan till 31st March 2022. All the other things in EEA continues. So the loan can be taken between April 2019 to March 2022. That we have got is introduction of 2 or in fact 3 new sections in TDS. First is section 194P. 194P is applicable only for senior citizens who are resident and age is more than 75. Age is more than 75. So, should be a resident, age should be more than 75. Third, the senior citizen should have only pension and interest income. Should have only pension income and interest income. If all these conditions are satisfied, should be a resident, age should be more than at least 75, and it can be 75 or more. Pension and interest are the only income that senior citizen has got. Then, if the bank which is paying the pension and the interest, same bank, it should be same bank which is paying the interest, has deducted the tax at source, TDS has been deducted at the applicable slab rates. If TDS has been deducted at the applicable slab rates, then this individual, this senior citizen, is not required to file the return of income. Whatever might be the income, is not required to file the return of income. Age should be at least 75, should be a resident, should not have any income other than pension and interest, and the bank has deducted tax at slab rates. Bank has deducted tax at slab rates. If all these conditions are satisfied, then tax is not required to, then return of income is not required to be filed. Bank should deduct the tax, on the total income. What is the total income? Please understand. How do we compute the total income? Here it will be salaries plus, here it will be salaries plus interest. And the bank, if the senior citizen gives the proof of chapter 6A deductions, that will also be allowed. Chapter 6A deductions will be allowed. Then you will have the total income. On the total income at slab rates, tax has to be deducted. At slab rates, tax has to be deducted. If these things happen, then the individual is not required to file the return of income. Next, another section that got introduced is section 194Q, where for the first time this section has been introduced. A TDS has been introduced on purchase. TDS has been introduced on purchase. If the amount of purchase exceeds 50 lakhs, amount of purchase exceeds 50 lakhs, then the buyer should deduct the taxes. Buyer should deduct the taxes at the rate of 0.1 percentage. At the rate of 0.1 percentage, the buyer should deduct the taxes. Should deduct the tax rate of 0.1 percentage on the amount exceeding 50 lakhs. On the amount exceeding 50 lakhs. That means if I have purchased from a particular seller for 60 lakhs, then till 50 lakhs, there is no requirement to deduct the taxes. On the balance 10 lakhs, 0.1 percentage, 0.1 percentage. Purchase exceeds 50 lakhs from each vendor. For whichever vendor it exceeded 50 lakhs, for that vendor alone, the buyer should be deducting the taxes. And buyer would be liable only if buyer's turnover is more than 10 crores in the preceding year. In the preceding year, here would be 2021. To determine whether the buyer is liable in the year 21-22, take the preceding year turnover. Preceding year is 2021. The turnover of the buyer should be more than 10 crores. That is, his sales in the P&L should be more than 10 crores. Then in the current year, he would be liable to deduct the taxes at the rate of 0.1 percentage if the payment or if the value of the goods purchased is more than 50 lakhs. Only on the excess amount it will be. That also, because it was a new section that got introduced, it is applicable only from 1st July 2021. For purchases made prior to 1st July 2021, this section is not applicable. This section is not applicable. So quickly, it would be if the buyer buys more than 50 lakhs. So whichever vendor has exceeded that 50 lakhs limit, then for that vendor tax has to be deducted at the rate of 0.1 percentage only on the excess amount. Buyer's turnover in the preceding year should be more than 10 crores. And then it is applicable only from 1st July 2021. One more new section that got introduced is 206AB. 206AB requires the tax to be deducted at the higher of the following rates. Higher of the following rates. First is at twice the rate under the relevant provisions or 5%, whichever is higher. Higher are the following: twice the given rate or 5%. If it has to be for a specified person. If it has to be for a specified person. Let's say I am making a payment under section 194C to a specified person. Under section 194C, let's say I am making to a partnership firm who is a specified person. So partnership firm under section 194C is 2%. Twice the rate given in the act would be 4% or 5%, whichever is higher. So you will deduct at the rate of 5%. Let's say I am paying a professional charges. 194J says 10%. So it is twice the rate. Twice the rate would be 10%. or 5%, whichever is higher, so it would be 10%. So tax has to be deducted at twice the rate or 5%, whichever is higher, if the payment is made to specified person. Specified person means was satisfied to two conditions. First, has not filed the return of income. The return of income has not been filed for 2 preceding years. 2 preceding years. He has not filed the return of income. And the TDS is more than 50,000. TDS and TCS is more than 50,000. Then he would be considered as specified person, where the tax rate would be twice or 5%, whichever is higher. Will not be applicable. This 206AB will not be applicable for deduction of taxes under section 192. That is for salary. Then 194B or 194BB cash flow incomes. 194B and 194BB are cash flow incomes. 194N withdrawing cash from bank or post office, like the withdrawing cash. And 192A. For these sections, 206AB will not be applicable. 192A is the PF taxable. If you withdraw taxable PF, then it has to be at the rate of 10% like this. 192 is salary, 192A is PF withdrawal, 194B and BB are cash flow income, and 194N. For all these things, 206AB is not applicable. That means even if they are not filed the return of income, tax will be only at the normal rate. It will not be twice the rate or 5%, whichever is higher, will not be applicable. So some of the important amendments that we have got for intermediate, that is part 1, that's already there. If at all you have not seen, as I told you, please see the comment section. And part 2, these are the very important amendments for the intermediate examination, who are writing either in May 22 or November 22 with relation to income tax. In case you have got doubts, please leave it in the comment section. I will answer to those doubts. Thank you.